Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your update on the markets. We're starting off with Apple. Apple has its big day tomorrow. It's going to unveil possibly an iWatch, new iPhones, and possibly a new tablet. We don't know yet. But unless these new products are really game changers, I think Apple could be in trouble. And here's the reason why I think that. If we only have to go back to last Wednesday when we had a really horrendous day in Apple stock, and by that I mean this day right here. That was a tremendously negative day, and of course the next day we followed through and we've seen a little bit of recovery. This is today's action so far. Not exactly enthusiastic on the upside, particularly since Apple has its big day tomorrow. Now this looks even more concerning if we look at the weekly charts. So we just have to go up here for the weeklies, click once, hold down, scroll down, weekly, and if we look at the weekly charts, this is really a bad picture for Apple. This particular week right here is a negative engulfing line, meaning it engulfs the previous week's action, the blue box, totally, with a lower low and a higher higher. If we close lower this week, it will confirm that this is a negative engulfing line and this is a top for Apple. Also, the line in the sand for Apple this week is 97.78. That's what we call the red line. Okay, that's the red line. If it goes under that line, I would say you want to exit the position, be on the sidelines, because things would not be looking good, at least in the short term, the intermediate term for Apple. Now, if we were to exit at 97.78, we'd still be making a very nice profit because we're long from 77.64. This does not change the overall bigger trend for Apple. So let's move on to our next market. Here we are, we're looking at the Dow Jones. It's a plus 90, so the trend is clearly still positive. However, you can see in the last several days, we have just sort of been going in a sort of square fashion. We haven't gone anywhere, just one day up, one day down, so forth and so on. Now, the key thing for us in this particular market, the key red line is going to be this is our red line for the Dow. I'm not sure it's going to get there because it's obviously much higher right now. It's 17,000, but you never know. This is the area you want to watch very carefully. 16,664. If we go through there, we want to be out of any positions in this index. Now we're looking at the S&P 500. The question is this market topping out? It really took out the previous highs, which you can see right here, and it sort of just didn't go anywhere. It didn't seem to have a lot. You can see the highs right here, and if we just draw a simple line across here, you can see boom, 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 boom. It sort of took it off, and they are acting in support, which is a good thing. So here's the support for the market right around these levels. Now the line in the sand, or the red line as we call it here, is 1,958. Okay, that's the red line for us. If it goes below there, we will be out, and we will be taking at that point a very small loss because we're long from 1984. Still have a nice profit in there, but this is our exit point this week. So watch that very carefully. Again, the trend still is positive. The longer term trend is positive, as is on the Dow and is on the NASDAQ, which is the next market we're looking at. Here's the NASDAQ looking and acting very well. You can see it's up today, and you can see that our positions are all positive in this particular market. We don't use this daily, okay? This is the daily. You don't want to watch that. The only one you want to watch is the monthly right here. That's the big trend. It tells you what the trend is doing. And the weekly right here. That's for timing. Okay, you combine those two. So you only want to be long when the monthly is green, and if you get a red monthly trade triangle, just exit the position. You don't go short. So anyway, the red line for the NASDAQ is 4,486. 4,486, and you can see we're quite a bit higher than that right now. So that's the line we're looking at this week. But generally speaking, the trend is clearly up, as it is in the Dow and the S&P 500. But watch these lines. Last week we talked about the Dollar General takeover of Family Dollar and how we didn't think the price was right. Well, you can see the action today. We're sort of a little bit flat, a little bit down from on Friday's close. We saw some profit taking coming in there, but we didn't think they would accept the offer. We thought it was too low, and whether they can up their offer, remains to be seen. But the key thing for Dollar General, the key level we're looking at, is $62.30. It's $62.30. If we go below that red line, we would want to be out of this stock, period. We're long from 57.70, and where major trend came in at 60.62. So it's worked out well, but nonetheless, it seems to be losing a little bit of its bubble. It seems to be resistance around the 65 area for this stock. So let's see how that plays out. Next stock on the pile here, and that's going to be Family Dollar, and let's see how they're doing. Now, Family Dollar is sort of going sideways. It's a 55 number, meaning a trading range, and certainly that's what it's been. The key level there for Family is 78.75. So we're very close to this level. You can see we're trading right now. So the red line, as we would say in our positions, would be 78.75. That's the red line in Family Dollar. Go below that, we want to be out of the stock completely. Otherwise, stay with it. I think that the Dollar General will raise its bid. I think they'll pay up as much as $90 for this stock. So let's see how things play out. I'm Adam Hewison for Market Club. Thanks for stopping by. Every success this week. Be sure to watch Apple. Let's see what they come out with tomorrow. I think it'll be an exciting day. Hopefully they'll come out with some game changers. We'll see.